This week, the fresh produce markets are once again proving just how quickly things can change. While tomatoes are on fire with prices jumping by more than 75%, oranges have gone the opposite direction with a sharp 29% decrease. Behind these swings are weather shifts, changing production cycles, and the ongoing tug of war between exports and local demand. Let's unpack what's really driving these markets and what to expect in the weeks ahead. This episode is proudly brought to you by Villa Crop Protection. With world-class solutions like Masterlock tailored for South African conditions, Villa helps you manage risk and increase productivity with research-backed confidence. We had a better week in the vegetable markets last week with potato prices 4% higher on 38 rand 6 cents per 10 kg, now 68% lower than a year ago, while the tomato price jumped by 75% week on week to 8 rand 81 per kilogram. Onions, however, traded lower on 40 rand 30 per 10 kg, 8% lower year on year, while carrots traded 2% lower on 4 rand 53 per kilogram. The average pepper price dropped to 17 rand 8 cents per kilogram. Cabbages came in higher on 1 rand 55, 49% lower year on year still, while sweet potatoes increased to 4 rand 95 per kilogram. Spinach traded almost 50% higher on 2 rand 54, although it must be mentioned that it came from a very low base the previous week. Butternuts increased to 11 rand 87, while pumpkins were also 1% higher on 9 rand 19 per kilogram. Garlic, however, decreased to 64 rand 53. Green beans jumped to 11 rand 19, with the latest cucumber price now on 12 rand 6 cents per kilogram. It was not such a good week on the fruit markets, with bananas decreasing to 8 rand 19 per kilogram. Apples came in lower on 13 rand 18, with the latest pear price dropping to 9 rand 55 per kilogram. Oranges dropped by 29% to 4 rand 23, with 11% more volumes, while avocados dropped to 21 rand 79. The table grape price, however, traded higher on 56 rand 66 per kilogram. Pineapples decreased to 9 rand 44, lemons decreased to 6 rand 6 cents, with the latest blueberry price 10% lower on 63 rand 93 per kilogram. For more detail on each of these commodities, please go and download our latest weekly fruit and weekly vegetable reports, which is available on amtrends.co.za. It's free of charge, but I would really appreciate it if you can subscribe to our channels. Not only will you be on top of the latest agri-trends, but it will help us a lot as well. This week, let's start with tomatoes, which saw a massive 75% jump in prices last week. Volumes dropped by almost 30%, driving prices sharply higher. Over the past few weeks, I mentioned that the mild winter and hot northern production conditions could result in a flush of supply followed by a shortage. And that's exactly what we're seeing at the moment. Despite the sharp price increase, demand remains relatively weak, however. For example, tomato prices are still 18% lower than a year ago, even though volumes are also down by about 15% year on year. Under strong demand conditions, prices would likely already be above the 10 rand per kilogram mark. As always, weather conditions are the biggest driver in the tomato market. Many winter producers are finishing up at the moment, with Letsetsele and Muketsi still contributing towards supply. Normally, volumes dip this time of the year until new regions such as Brits enter the market in the coming months. Another factor supporting prices is the absence of Namibian imports, which has increased reliance on the local produce. Retail chain demand has therefore shifted more heavily towards a local supply, giving prices an extra boost. Looking ahead, we expect prices to remain firm this week as demand picks up and lower quality stock stays limited. However, once Brits enter the markets, which can be within the next month, prices could soften again. The other big mover this week is oranges, which dropped by 29% last week. This was mainly driven by an 11% increase in volumes, which pushed prices lower. At the moment, total supply on local markets is nearly double that of last year, as more fruit stays in South Africa due to weaker export demand. Exports to major destinations, including Europe, the Middle East, and North America, have all fallen sharply year on year. This slowdown is linked to a combination of factors, including stricter phytosanitary standards in Europe, higher shipping costs, and softer consumer demand in some overseas markets. At the same time, export to Southeast Asia, Russia, and South America have shown good growth, but these markets are generally more price sensitive and may not be able to fully absorb the surplus volumes that we have at the moment. As a result, more fruit is being directed into the local markets, which places additional pressure on prices at the moment. On the positive side, lower local prices are stimulating consumer demand, especially through retail promotions, which could help ease some of the oversupply. Still, the imbalance between exports and domestic channels remains the biggest risk for this market. Looking ahead, much will depend on whether exporters can expand their footprint in alternative markets and how quickly demand recovers in these markets. Until then, prices are likely to remain under pressure or at least below the previous season's prices, especially if local volumes continue to remain on these higher levels. This episode was proudly brought to you by Villa Crop Protection. For more detailed insights and forecasts, please visit amtrends.co.za and download our latest reports. It's free of charge. I'm Dr. Johnny van der Merwe. Thanks for tuning in and see you next week.